Hey, my friend Chad, also known as Coach Carlson, is about to tell you about a major mistake he made that almost put him out of business.
Hey, thanks, Nasser. This whole story starts in November 2007 when I walk into a big courtroom. My heart is pounding so hard I can feel it up in my throat. But I should be more nervous than I actually am because I'm about to make the biggest mistake of my young real estate investing career, a mistake that would almost sink me. The bankruptcy judge smacks the big wooden gavel to quiet the room. There are two people sitting in front getting ready to bid on a property that's about to go up for auction. The court is selling this property as part of what's called a Chapter 7 bankruptcy in order to pay back the lenders who want their money back. One bidder is me at 27 years old, already with some confidence, but still a very green investor. The other bidder is at least twice my age, and you can tell he's one of those old, grizzled, streetwise veterans of investing and business. Just minutes before, this same grizzled investor had asked me quietly if we could work out a deal. If you'll let me win this bid at a low price, he said, I'll take half the 14 units and then I'll give you the other half at the same price. We'll both win and we'll both get a good deal. It sounded good, except for one big thing. It was illegal. I know now that his plan was something called auction collusion or bid rigging. Look it up on Google. I didn't actually know about the law at that time, but I did know enough that I didn't trust this guy or his scheme. So I told him, no thanks. And now, here we sit. Old Grizzled is sitting next to me and he's clearly mad, glaring at me out of the corner of his eye and sitting on the edge of his seat like he's ready to pounce. For my part, I'm extremely nervous because of the strange conversation I just had with Old Grizzled, because of the big, intimidating courtroom, and simply because of the electric atmosphere of an auction. On top of that, I have another situation on my mind. The situation is that I want to help the owner of the property, the person who originally filed this bankruptcy. He's a nice older gentleman who started his adult life with nothing, but he built his way up to be the owner of these 14 units. But he's borrowed $170,000 from aggressive lenders who now want their money back. He said he originally filed bankruptcy to stall and to protect his property from foreclosure. But now the whole plan has backfired and he's about to lose his property anyway. The owner had originally called me about the property a few weeks before, and he had asked if I could buy the property for a price of $305,000. I told him that I couldn't buy the property for that. Probably the most I could pay was about $245,000. So then he asked me if I could do something different. If first I could buy the property for what he owed on it, which was about $170,000, and then if second, I could sell the property, either some of it or all of it, back to him. Even if I paid a slightly higher price than I wanted to, he said, the court would give him all of the proceeds above and beyond the $170,000 that he owed, so he could just use that money to pay me back either as a down payment or to buy back some of the properties. So for some reason I've never been able to explain ever since, I naively decided to give it a shot. And I decided to give it a shot without having any kind of firm commitment from the owner of the property and without really understanding how this process worked. It would turn out to be a very painful decision. But back in the courtroom, the judge is giving a brief introduction of the case and of the property, and then an auctioneer begins the bidding. $170,001 is the opening bid, he says. Old Grizzled quickly jumps to $200,000. So I bid $205,000. He bids $210,000. The craze of the auction, my competitiveness with Old Grizzled, and my sympathy for the owner lead me to make an emotional decision to bid way above my target number. So on and on Old Grizzled and I go in $5,000 increments until finally I say $285,000. Then there's nothing, just silence. Old Grizzled is out and I'm the winning bidder. The court officials thank me and then they congratulate the lenders who will now be paid in full because of my higher than expected bid price. My heart, which hadn't slowed down a bit since the moment I arrived there, slowly starts to sink into the pit of my stomach. I know deep down I've just done something extremely stupid. The rest of the day is a blur. I sign a purchase contract and pay a $5,000 earnest money deposit. I have 30 days to close and purchase the property. I eventually talked to the nice old property owner who got me into all of this, and that's when things start to go sideways. I learned that he's changed his mind and he now prefers just to walk away. Apparently he wants the cash more than he wants the property. But what am I supposed to do now? My 1-hour drive back from the bankruptcy court was the longest drive of my life. I called my business partner, who's 50-50 with me on everything in my real estate business, and I tried to explain what just happened. We've been through a lot together since we started our business 5 years earlier, but right now I just feel like I let him down, and it's a horrible feeling. But to his credit, he doesn't freak out. He just says, "We'll figure it out. Let's just focus on what's next." For me, what's next is climbing into my bed at 1 p.m. in the afternoon, getting under the covers and putting a pillow over my head. My wife, who walks in later, knows that something is very wrong when she sees me with the lights off in my bed in the middle of the day. But the next morning, I finally quit my sulking and I find my courage to face the reality of what's happened. It's time to try to make the best of it. So here are the facts that we're facing with this property at the time. There are 14 total units, but they're in 2 different locations of our local town. Out of the 14 units, 4 of them are vacant with no one living there. And a couple of the units are occupied with someone living there, but they're not paying rent. But the potential, if all units are full and if everyone is paying on time, is $5,250 per month in rent, or an average of $375 per unit. Yeah, I know, rents have changed a lot since 2007, but even today, those same units would rent for about $700 per month. But beyond our tenant problems, the property condition is rough. The owner hasn't spent enough money on maintenance for a long time. We estimate that we need to spend about $100,000 in repairs. So this is a project that we're going to have to spend a lot of money on. In summary, we're going to have to pay $285,000 to buy the property, over $100,000 to fix it up, so we'll have a total of about $385,000 invested in the property. But in case you're keeping score, with a rent of $5,250 and a total purchase price of $385,000, this is not a bad deal on paper because it can cash flow. And it could probably be worth about $425,000 to $450,000 after we're finished fixing it up. But it'll take a lot of work and a lot of risk to get to that point. And to give you some context, we are already stretched thin in a year, 2007, when we end up buying 33 total properties in 1 year. Plus, while we didn't know it yet, the storm clouds were beginning to brew for the worst economic recession since the Great Depression that was about to hit everyone really hard. So what do we do in the end? First, I try to break the deal into something smaller that's easier for us to digest. So I call back old Grizzle to see if he would buy part of the property, even at a lower price, but he's not interested. Second, we try to walk away from the deal and just lose our $5,000 deposit. We decide, given everything else that's going on, it's just not worth our time or risk. So we just wanted to cut our losses. But the bankruptcy trustee and the auctioneer don't want to hear it. They threatened to sue us to force us to buy the property. They also threatened to re-auction the property, and if a new bidder buys the property at a lower price, probably old Grizzle, then they would sue us for the difference of what they lost at the new auction. Damn, that makes me want to crawl back in my bed under the covers again. But it also forces our hand toward a third option, buying the property. So we get down to business and we write down our goals and our plans for the property. First, we love to eventually resell the duplexes and recover our investment and pay off our debt. Or second, if we're able to get safe, long-term financing, we'd be willing to keep the properties as rentals. Or third, we'd be willing to do some combination of the first two, selling some and keeping the others. So with those goals and plans in mind, we set out to get financing to buy the property. Luckily for us, ever since we started 5 years earlier, we have been developing relationships with local commercial lenders and with private investors. So first, we applied for a commercial bank loan to cover 80% of the purchase price. We applied with 3 different banks. 1 said no, and 2 accepted our application to make us a loan. But how are we going to get the money for the 20% or $57,000 down payment? And where's the cash going to come from to do the $100,000 in repairs? We do have cash reserves, but with all of the investment purchases we've made this year, we are super tight on any extra cash for investments. So we talked to one of our private investors to help us out. After explaining the upside potential and the cash flow of the property, he agrees to make a $159,000 10% interest loan using his self-directed retirement account. We also had to agree to secure his loan with a second mortgage on these properties that we were buying and second mortgages on pretty much every other rental property that we own at the time. But fortunately for us, he also agreed to let us accrue interest, which meant we didn't have to pay it out of our cash flow at first, and over a year's time, whatever we owed would be added to the balance of his loan. Pulling all of this financing together in a short period of time isn't easy. It also has a lot of risk. But all that being said, I've been grateful ever since to our lenders who allowed us to make this happen. I'll shorten the story from here and tell you what happened in the end. It was a long slog of almost 9 years before we got completely out of this property. After 1 year, we had fixed up the property and filled all of the units with paying tenants. So we decided at that point to put the property on the market to sell. Luckily, even though it was the middle of the Great Recession, we found one buyer who wanted to buy 8 of the 14 units for a price of $269,000. With that $269,000, after all of our sales costs, we were able to pay off our private lender completely, including the accrued interest, and we were able to pay off $100,000 of the money we owed to the commercial bank. So after a really deep breath of relief, right in the middle of the recession, we were left with 3 buildings or 6 units and about $128,000 of debt with our commercial lender. So we decided to keep those remaining units for a while, and fast forward to 2016, we sold those units for $172,000. In the end, we actually made about $30,000 on these properties, but over a 9-year period and all the amount of work we put into it, it actually wasn't a lot. But most importantly for us, we survived my really big mistake that could have been a lot worse. There were so many lessons that I personally learned from my mistakes and from this property purchase, most of them painful. But I hope listening to this story has let you learn those same lessons without having to make my mistakes. If you'd like to get more real-world real estate lessons and stories just like this, I think you'll like my next video, which is called How to Confidently Buy Your First Rental Property in 10 Steps. You can click a video link above me here, or you can also find a video link in the description below. I also want to thank Nasser, the real estate guru, for letting me share with all of you. If you're not already subscribed to his channel, you need to go ahead and do it. He's someone who actually does this business. That's why he's called the Guru, and he's someone you definitely want to follow. My name is Chad Carson. You can also call me Coach, and I'm all about helping you get out of the financial grind so you can do more of what matters. I hope to see you in the next video.